Matjaz, thank you so much for joining us here at SuperReturn International. We've heard a lot this morning about emerging markets. That must be music to your ears.
Yes, first of all, thank you very much for inviting me. Yes, I mean, I think the emerging markets are being so beaten down through the media, and there has been such a lack of confidence in emerging markets across the asset classes that we are close to be reaching the point of the maximum pessimism. And as we all know, this is the point when the contrarian investors should be entering the markets. So therefore, we are very confident that now is probably one of the best possible times since the Russian crisis in '98 to be putting your money to work, particularly through the private equity investments within the global emerging markets.
Why would you say that? What can you say to justify that as a statement?
So first of all, what we are seeing is like a huge retreat of financing out of the global emerging markets. So we see this retreat throughout the asset classes. If you go into the specific asset classes, you see significant outflows in the debt emerging markets, then you see significant outflows in equity emerging markets, and then on top of that, particularly for example in the Central Eastern Europe, you see a significant retreat by banks out of the emerging markets. So for example in the Central Eastern Europe, you see that the banking sector has been dominated by the Italian banks, by Austrian banks, by Portugal banks, by Greek banks, and all of these banks are cutting down on that end. On the other hand, what we are seeing is that there is a huge increase in demand by the high growth companies across the emerging markets. So we are seeing this big void being built up between the demand and supply, and naturally this void is creating significant investment opportunities, and even more so giving the buyers the opportunity to structure the deals with a very strong downside protections, and therefore actually we are able to eliminate a lot of the risks which are being perceived as being too high for the investors to enter into those markets.
So you remain optimistic despite what is a very complex geopolitical environment at the moment, and obviously I'm going to ask you about what Brexit will mean as well. You remain optimistic despite those factors?
Look, I mean, I think it really depends on where within the emerging markets you do your deals, and it depends on the strategy that you are having. So we are having most of our deals are within the growth equity, and within this segment we are seeing more opportunities than ever in the history, and more importantly, because we take the minority stakes, we are able to structure those deals in a way which more or less eliminates most of the risks which people perceive to be the key negative drivers of the current emerging market. Hedge against the risks which we are seeing right now.
I talked about it a moment ago. What are your thoughts on Brexit? And it's going to be a big topic over the next 3 months until the British people vote, isn't it?
I mean, look, Brexit, it's of course a topic which dominates the media. I think it's a very healthy discussion, by the way, and I'm very happy that Britain is taking it up, because I think we all are partially disappointed in how slow the structural reforms in European Union are going on, how all of these big issues, either political or monetary issues, how slow they are being tackled. So therefore, we see this imposed debate by Brexit to be very healthy, and therefore we will definitely be seeing a lot of volatility until the actual referendum takes place in June. But whatever the outcome is, I think that it can be only positive outcomes based on these debates, because this will force the European Union to take steps which they were basically not willing to take in the past.
Thank you so much for joining us. Good to hear your thoughts.
Thank you for having me.